Hey traders, in this video, I am going to tell you how you can stop blowing your prop firm accounts through proper risk management. But we're going to actually dive into the math of it so you know exactly how much to risk per day and then calculate how much to risk per trade and be able to know how many contracts to take and everything based on that risk. And then we're going to go into your prop firm and actually implement these risk strategies so that you will stop blowing your account as long as you follow these rules. All right, let's dive into it. So first thing we're going to do is dive into how much should you be risking per day. And I'm just going to give you a couple of examples, and then you can take your numbers, your profitability, your risk tolerance, and all of that, and actually put in your own numbers. So this is just going to be some examples. Starting with your prop firm account, the first thing you want to consider is what is your drawdown before this account is blown. So let's take a typical 50K prop firm account, and you have a $2,000 drawdown limit. Like if you hit a $2,000 loss, then your account is blown. So let's start with $2,000 and then take a look at how profitable are you currently. So how many days do you want to give yourself of losses before this account is blown? So for example, let's say you want to give yourself 5 days in a row. Like if I have 5 red days in a row, then my account is totally lost. So in that case, you would be risking $400 per day. Now, if you're a seasoned trader and you're a lot more profitable and you have more regular green days, then you might be able to risk a little bit more. And then on the other end of the spectrum, if you're brand new and you're still practicing and you want to give yourself more than 5 days before this account is blown, maybe you should risk less. So let's start off with that $400 for now. Next, you want to look at how much should I risk per trade. So for this, you want to look at how many losses do I want to give myself before I have to close up my computer and walk away and be totally done for the day. So if you have $400 per day in this example to risk, and let's say I want to take 2 trades before, like if I take 2 losses and then I need to lock up my account, then I have $200 per trade that I can risk. And then same thing, if you want to give yourself 1 trade, like I'm just going to take 1 trade today, whether it's a win or a loss, then I am totally done for the day. Then you can risk $400 per trade. Or if you want to give yourself a couple more chances, then you can risk less per trade. So let's use, for the sake of this example, let's use $200 per trade. All right, now taking that $200 risk per trade example that I gave you, we're going to come in here into TradingView and we're actually going to calculate how many contracts or how many shares you should be taking per trade. So come over here to your forecasting and measurement tools, and you can choose either long or short position for whichever one you're doing in this case. So for my example, I'm going to choose short. So we're going to take a short here, and we're going to target this previous low. And then I'm going to put my stop loss right here above that previous wick high. So this is the trade example that I'm going to be taking. Now in here, if you click on this, I'm going to go into settings. Click there, so click there, and then risk, I'm going to put in $200 risk per trade. So you have to change this $200 to US dollars instead of percentage. And then on this tool right here, it's going to tell you how much quantity you should be taking. So in this example, if I'm trading MNQ and I want to take this trade, I should purchase 3.478 shares or contracts. So you can round up, you can round down, whatever you want to do. I would suggest that you round down, because if you round up and your next trade, you're not going to, and you lose, you're not going to have $200 on your next trade. So round down to three contracts in this example. And you can see if I adjust my stop loss, so let's say my stop loss is there, it's going to adjust that quantity. So now in this example, I need to take 2.27 quantities of this, or contracts for this trade. So use this to calculate how much size you can risk per trade so you can keep your days consistent. You can keep your risk consistent and avoid blowing those accounts. So now from here, let's go into ProjectX, and I'm going to show you how to actually implement this so that when you're in the moment, you don't make poor decisions. Now coming into our Top 1 Futures ProjectX platform, there are several other prop firms that use ProjectX. This is my favorite by far. You're going to come into your settings, go to risk settings, and you're going to enter your personal daily loss limit. So that example that we gave, $400. I typically put in like 420, maybe a little bit over, just to account for fees so that I don't randomly get liquidated if my stop loss isn't quite hit. So I'll do that. And then the action that you take, you can liquidate and block. This is the one that I suggest you choose. Liquidate, that's just going to close your position, but it's going to allow you to take another trade. Liquidate and block is actually going to lock your account for the remainder of the trading day, and then you're not allowed to take any more trades until the next trading day opens up. So liquidate and block and save. From there, you also have an option to put in a personal daily profit target. If you have a consistency rule requirement for your prop firm, I definitely recommend that you enter something there as well. Same thing, you can put in a number and then liquidate and block. I suggest that. But that's a different video for how to calculate consistency and stuff. From here, I'm going to give you guys one more step to actually lock this in so that you will stop blowing your prop firm accounts. What you need to do is after you click save, come down here and go to lockout risk settings. Lockout risk settings for the rest of the day. What this is going to do is prevent you from changing your risk settings in the middle of the day. So let's say you take one loss and you're $200 down. You take another loss and you're $325 in the red. And then you're like, uh-oh, I want to change my risk settings so that I can take one more trade because I'm going to be green on the next trade and I'm going to earn it back, right? And you know how that spiral starts. Then you just start losing and you're going to liquidate your account. So what you want to do is this risk setting right here makes it so that you are not allowed to change your risk settings once the session has started. So lock out risk settings for the day. Yes, lock out for today. And that's going to make it so you can't change your risk settings for the rest of the day. All right? So hopefully this was helpful, and hopefully you can stop blowing your prop firm accounts.